JetBlue shares plummeted more than 26% on Tuesday after the airline forecast first-quarter results that were below Wall Street's expectations. The carrier projected its revenue per available seat mile, a common metric for airlines that's also known as unit revenue, could fall as much as 0.5% or grow as much as 3.5%. But analysts were expecting unit revenue to grow by nearly 7%, according to data compiled by LSEG. JetBlue is also facing higher costs as ongoing inspections of certain turbofan engines have grounded several of its planes. One bright spot was JetBlue's smaller-than-expected loss, aided by cost-saving initiatives and improved pricing. After its $3.8 billion merger with the now-bankrupt Spirit Airlines fell through in March, JetBlue moved to bolster its finances by postponing the delivery of 44 Airbus jets. The move is expected to reduce its projected capital expenditures by about $3 billion over the next 4 years.
ASML beat market expectations in the fourth quarter. The Dutch computer chip equipment maker scored bookings of $7.39 billion. A boom in AI drove demand for the company's most advanced equipment. The number was almost double analyst projections and much higher than the third quarter's total. ASML also reported net income of $2.8 billion. Investors were delighted by the news and shares jumped 11% early Wednesday. The large order influx may reassure ASML and other chip stock investors that AI chip prospects might stay healthy. That after a tumultuous week dominated by the global emergence of Chinese AI firm DeepSeek. Its model uses less computing power than those of rivals, calling into question whether tech giants like Google and Microsoft will need to follow through on plans for huge investment in AI chips. Large chip makers like Nvidia endured a brutal sell-off after the model's release. ASML's top customer, Taiwan's giant TSMC, manufactures most chips designed by Nvidia and the software
Boeing
firms.
reported an annual loss of $11.83 billion on Tuesday, its largest since 2020. The plane maker has grappled with problems at its commercial and defense units and the fallout from a crippling strike by US West Coast factory workers. The loss demonstrates the challenges facing CEO Kelly Ortberg in turning around the firm, particularly as it cedes ground to rival Airbus in the delivery race and comes under the crosshairs of regulators and customers following a series of missteps. The company reported a quarterly cash burn of $4.1 billion, a metric closely watched by investors. That was slightly lower than analysts' expectations. Ortberg, who took to the helm of the plane maker in August, said the company was making progress in restoring stability to its struggling production lines. That's after a mid-air accident a year ago raised concerns about the safety of its jets. The company reported a loss of $3.86 billion in the fourth quarter due to what Ortberg called disappointing charges in several fixed-price defense programs. After banking record-high profits in the 2010s, Boeing has bled more than $30 billion since 2019. 2 fatal crashes of its best-selling 737 MAX jet triggered production quality and safety concerns, as well as worries that it misled regulators during the plane's certification process. While the mid-air panel blowout on a nearly new 737 MAX last January dragged Boeing into another crisis.